Hi everybody, this is Alan Ellman, the Blue Collar Investor, and welcome to Lesson 6 of our Beginner's Corner information series on selling cash secured puts. In this lesson, we're going to review executing a put selling trade. In other words, we're going to start the process of generating cash into our brokerage accounts. Now, in the first 5 lessons, we went over several topics. First, we learned the basics of options, specifically gearing it to selling cash secured puts. Then we went through the process of how to select the best underlying securities for selling puts, and it was a 3-pronged process. First, we did a fundamental analysis, sales, revenues, and earnings. And then we did a technical analysis. We reviewed a price chart and we looked at the 4 technical indicators. And finally, we went through some common sense principles like avoiding earnings reports and minimum trading volume. At that point, we had an elite watch list of the best stocks for selling cash secured puts. At that point, we then did our calculations to make sure that the put selling process was going to generate enough cash that will meet our goals. So now we're at the point where we've selected the underlying securities, we've selected the specific options, and now we're ready to instruct our broker as to which options to sell. So actually there are 2 types of orders I want to discuss. The first is called a market order, and that's an order to buy or sell a stock or an option at the current best available price. So that would be the bid price on an options chain if we're selling. Now, we use these when the bid-ask spread is very close together relating to the stocks. When we go with options, I always prefer limit orders, and that's an order to buy or sell a stock or an option at a specific price or better. So, for example, if you sold a put for $1, we're instructing our broker to generate $1 or better on the sale of that put, or the trade will not be executed. So we always use limit orders as it applies to selling put options. Now, before we get started, we have to go through a bit of a process. And the first step is to fill out an options approval form, which is provided to you by your broker. And this relates to FINRA Rule 2090, which is known as the Know Your Customer or KYC rule. And it actually requires our broker to use reasonable diligence when opening accounts for retail investors just to make sure that we're not taking inappropriate risks. So the onus is upon not only us, but also our broker to make sure that we're in the right place as it relates to options trading. Now, there are different levels of trading approval, and there is no one standard level. It can vary from broker to broker. But this is a typical one. You could see here covered call writing right at the top, which means it's the easiest one to get trading approval for because many consider it one of the most conservative of option strategies. And so that would be in level 1. Now level 2 would incorporate level 1 plus a little bit more, other strategies, and so on down the line. Now put selling really could be found anywhere from level 1 to levels 3 or 4, depending on the broker. So what you need to do is contact your broker and ask them what level of trading approval is required for selling cash secured puts, and then you would fill out the approval form and take it from there. Now, where would you get the experience for trading? Well, you could read books, take courses, paper trade. They'll also ask you information about your personal finances, and that will dictate whether or not you're going to get the approval. And you're more likely to get trading approval for covered call writing and put selling than some of the other strategies. Okay, let's assume for a moment now that you've gone through the process and you've obtained the approval. Your account is all set up for selling put options. The first step is to fill out an order form. What you're doing here is you're instructing your broker as to what trade you would like them to make on your behalf. Here you see that we're selling the $55 put for Facebook, and we're setting a limit order of $2.55. Now, you could see the arrow in the middle of the screen. That red arrow shows an all or none box. Do not check that box if you're going to negotiate a better bid price. There are ways that we can negotiate with the market maker that will oftentimes get us a better price than the published bid, and I explain how to do this in my books and DVDs. But in order to accomplish this, you cannot check that box known as the all or none AON box. Now on the right side of the screen, you can see more information. Facebook trading currently at $59.10, and the bid price is $2.55. So once you've filled out the order form, you go to the bottom and check preview order, and that will take you to the next page. And you could see here the preview is exactly what you entered. You just want to check and make sure that everything is correct before you actually instruct your broker to execute that trade. And again, here we have the 55 put with a limit order of $2.55, 100 shares per contract. It's a day order. We did not check the all or none box. And then at the very bottom, once we've reviewed it and everything's good, we then place our order, and we're instructing our broker to, in fact, execute that trade on our behalf. Now, once we do that, we want to make sure the trade has been executed. And usually that only takes a couple of seconds as long as they're asking for the published price. And here we check the check order status. And finally, that will take us to the screenshot that will show us that the order has, in fact, been filled. If you can't read it, that blue circled area on the bottom right of your screen says filled. So it was filled exactly as we instructed our broker to do. And that's pretty much it. The 4 steps, they're pretty simple. Yes, it's a bit annoying going through the process of getting the trading approval. However, for those of us that master one or both of these strategies, covered call writing and selling cash secured puts, going through this little process is going to be well worth your time, because then you have years and decades to benefit from this great strategy. So let's summarize now. We must fill out a broker approval form, and that approval will be based on the level of trading approval that we're requesting, and also the client experience and finances as well. Always use limit orders when buying or selling call or put options. And the trade execution is a 4-step process. Pretty simple. Now, I always recommend to all new investors to paper trade for at least 3 to 4 months before going live. Before risking even 1 penny of your hard-earned money, you need to educate yourself and practice. And that's what my books and DVD programs are for. And there are also certain platforms where you could practice, and there are some free sites as well where you could do that. If you shoot me an email, I could send you some information on that. Or sometimes you could find it on the free resources link of our website, thebluecollarinvestor.com. All right, there you have it. So lesson 6 is now complete. In our next lesson, lesson 7, we're going to discuss position management or exit strategies. What do we do if the trade turns against us? What do we do if it turns out much better than we anticipated? There are certain steps that we could take as far as management goes that will allow us to mitigate losses, turn losses into gains, and in many cases enhance gains to even higher levels. So that's what we're going to talk about next time in Lesson 7. Thanks so much for watching this video. I hope you enjoyed it. And as always, this is Ellman, the Blue Collar Investor. Take care, everybody.